There you go. There's your sign. But now I'm speaking. But good morning, everybody, ladies and gentlemen. Thank you for joining me this Saturday morning. Good morning, Mirza. Thanks for hanging with me as well, sir, and all your help. All right, let's get this party started. So, welcome to the Funded Trader System. Passing firm evaluations for financial freedom. All right. All right. So this is how I want to have this course structured. Audio's not great. How's it for everybody else? Does it sound like I'm far away, or am I up and good? All right, let me double check, make sure it is going to my headset real quick. It should be. All right, how about now? Yeah, like a speakerphone that makes me think, no, it can't be my webcam. It's not even plugged in. Better? Okay, excellent. Okay, yeah, I just changed it there. I might have been pulling it from my computer or something. Anyways, I'm glad we got it fixed. All right, so the way I got this whole class structured, I'm going to start it off with saying, like, I am not perfect. Like, to me, a lot of this stuff, I go through it, and it's second nature to me, right? And so there's parts that I miss, right? Because I don't realize I have to no longer think about it. It's just something I know. So if like a good question's asked, or if something pops up, or like, oh, we should probably throw this in the class, then I'll go ahead and then we'll go ahead and add it to the class. Once the class is complete, you will get a PDF version in the class folder. Basically, as it continues to grow, ultimately, um, for those of you that are with me over the next 3 months, I intend to continuously keep it growing, right? And to ultimately like the best little PDF you want to defend with your life or something. I don't know. That's a little um, exaggerated, but I think you can understand where I'm coming from with that. But that is the idea. Cody's beard is weird. uh, that's funny. Um, um, okay, y'all ready? Y'all ready to do this? All right, and also one other thing, I'm sure there's gonna be tons of questions, which is fair, and I'm here to answer them. We are slotted to go from 10 to 12. If we go over, I am okay with staying. I will stay until this is all done. I believe we get it done in 2 hours, but however it goes over, like I said, then I'll stay over until we get it all taken care of. You know what I mean? But that's the window right now. And as far as questions go, at the end of each, we'll call it little section, there I'll take a moment to ask for questions, really. Like and I like to keep the questions in the subject matter just being covered. So like if we're covering TradingView and we haven't started covering the prop firms yet or whatever, don't start asking about the prop firms. Like, hold on, we're getting there. Let's go ahead and just start. We're taking each step at a time, and by the time we get there, maybe you'll have your answer done. However, say we covered TradingView, and now we're covering prop firms, but a TradingView question pops up. Sure, ask that question, but was at least keep it on things that have been covered there. You are going to learn my trading strategy there, HCP. The strategy is what passes the funded accounts. That is what passes the funded accounts. You don't just pass them by. You need a strategy to pass the funded accounts. But yes, you understood everything correctly. There is a strategy portion to this. All right, so I was going to get started. So just a little bit about me. We're going to talk about me. We'll talk about the prop firms. We'll talk about the futures markets. We'll talk about the 6 that I watch. You could use this setup honestly on any futures product you want to trade. However, I focus on the 6, and for me that's plenty. But though I'm sure if you're more of like a forex trader, you may be more in tune with that type of market. I know they have futures and forex and things like that. This setup could be used on any futures product, but the 6 that I use we'll discuss there. Talk about the tools needed, and then here you go, ACP. We'll talk about the setups that I trade, and then also trading as a business, how to really do that, and how you could leverage these firms to really trade as a business. and hit your financial goals. All right, so a little bit about me. So I've kind of been all over the place in terms of financials, or like not financials, I guess. I was going to go into I meant resume. My resume has been all over the place. Um, so my trading expertise, when I'm trading options, I prefer spreads because that is options to me. The Greeks matter, so I am more of a spread trader. I do have a background in dirt pool trading, directional trades, that type of stuff. And then I've done, as far as trading goes, I've done everything from day trading low float stocks, day trading futures, day trading mega caps. I've done it all. Professional experience. I was a U.S. Marine rifleman, as a flight paramedic, a high threat contractor. I've been a prop trader for the options and future side. And hobbies wise, I do a lot of things with my family. My family is my main thing. I like to do outdoor activities, get the kids outside, get them away from whatever screen they are trying to use. And then I do enjoy doing a bunch of like firearm stuff. And then as of late, I've gotten pretty heavy into jiu-jitsu stuff as well. Got a tournament coming up on the 2nd. Got to get ready for that. I get choked out. All right, so continue on. All right, my journey in trading. This doesn't change much from what most of y'all probably heard in the webinar. So how I got into trading. So here's the picture on the left with the big saw right there. That's young. I think I was 18 right there in Iraq. At the start of like the Iraq War and whatnot. And then ultimately, like so, right out of high school, went into the Marine Corps. Got out, become a paramedic. And then ultimately tied the two skill sets together. They took my tactical background and then tied it to my medical background, and then it turned me into this guy right here, where I am now a tactical medic for the government in high threat areas. This particular one picture right here is where I was part of the QRF, where I was an air ground QRF. So basically, anything and all things bad that occurred to any of the American interests and assets and people and all that stuff over there, it was my job and my team's job to go get them out of danger and get them to safety. Um, on top of that, um, so how this all transitions into trading is while I was on this side, I was wanting, my first son was on the way. I couldn't trade his internet was blocked. I paid a local Afghan cash, US dollars. It goes a long way in that country. And I would give him some cash. He would put data on a mobile hotspot for me. And I learned to trade on um, a, a mobile hotspot as good as I got. And then I learned to swing trade for there and just really grew. And that's actually where I started to, that's when I joined the prop trading world, was whenever I was overseas. Like I mentioned before, I had Skype interviews over there with the firm and whatnot, and jumped through all their hoops, and then ultimately got my hands on their cash. And I still traded for the prop firm while I was still contracting. Just I could swing trade while I was at it, while I was over there doing all that stuff. I double dipped on the income. But that was how I got to trading. Basically, went from the military, went overseas, and wanted to learn to trade so I could find a way to come home to my family. I think it's really important to understand our why. Everyone is here doing something or needs this for something, right? For me, my why to learning to do this was my family. Um, or at the time, I only had my wife, and my first son was on the way. And I had a lot of guys on my team that been doing it longer than me, and they were kind of stuck, like they couldn't go home. I would be overseas anywhere from 3 months to sometimes 8 months at a time overseas, and then I would come back only for about a month or a month and a half. And I didn't want to miss out on my kid's life, right? And so I wanted to find a way to have my money make me money, and then actually have the ability to stay home with the family. So that's how I kind of got into it. It was really my family, and I think it's really important that everyone understands that. Everyone focus on your why. All right, so about the jump in the platforms. Yeah, that's the 249. And okay, so think or swim. So the charting has to happen on TradingView. Thinkorswim does not have the super trend indicator. Thinkorswim does not have the appropriate wrinkle bars. They do the wrinkle bars based off of just a block. You choose a random number and it goes. The wrinkle bars that I use in this particular strategy also, you can set it to ATR. Also, the anchored VWAP is important. The anchored VWAP is a tool that you could use on TradingView, and the one on Thinkorswim is not accurate in my honest opinion. Wrinkle bars. We'll dive into that. James is going to blow y'all's mind on it. We're going to cover everything here, so do not worry. We're going to cover it. I'm going to pull up TradingView. I'm going to show you how to set up your charts, and then we're going to get to the firms, and then we'll get some of that. So we're going to do it all together. And so you can see how it's done, and also this is also recorded and whatnot, so you may see it as price continues on. Okay. All right, so prop firms, what are they? Why do we use them? And how do they work? Some of this is going to seem pretty quick. Things where we stick around, where it's going to take the most time is covering the setups, and then also setting up TradingView is going to be relatively easy as well. Trade Ninja carry, I am not sure. I actually don't use Trade Ninja. Or Ninja Trader, sorry, Trade Ninja Trader. You know what I mean. However, TradingView, it's like $36 or something like that. And in the grand scheme of things, and the amount of capital you can be pulling out of this, it could it's a small price to pay, especially if we're trading off of like if you're trading as a business. Sorry, is what I'm getting at. As far as TradeStation, Stephanie, I am not sure as well. All I'm using is TradingView for charting, and then I use my Tradovate for using Tradovate for executing trades. TradingView for charting, Tradovate for executing trades, and I'll walk y'all through all of that. Because Tradovate has the free trade copier, and that is where the benefit of using multiple accounts comes into play. And I know there are some third-party trade copiers out there, but I do not actually. I don't know of any of the other ones other than Tradovate. It's all I've used. All right, so prop firms, what are they? So basically, these are firms, financial firms, that trade their own capital. Why own capital? Own capital versus having like clients, right? That's kind of the difference there. Is like if you are, so there's like brokers, right, where you have clients. You're taking their cash and you're trying to grow their account. However, as a firm, it's like the capital is the business and the business is the firm, and then they allow their employees, which are the traders, to grow the account. So instead of like selling and buying things, we're actually going to go ahead and trade that's how the firm grows its money, by its employees, which are the traders. That's kind of how it grows. And there's tons out there. They right now, there for a while, I know there was a lot of concern about the legitimacy of these, and I know there has been a fall of a lot of firms. And I want to ask y'all, do y'all happen to know why, which firms have failed? Because there's only been one thing that's been common on the firms that have failed. No idea? All right, the firms that have failed, like Surge Trader failed, all the other ones that have failed, no, they're CFD firms. CFDs are illegal in the United States. They were pushing CFDs. So what exactly is a CFD? A CFD is actually you're trading it as a so it's like they're like Apple, Google, all these U.S. stocks have CFDs. What actually is CFD is whenever you purchase the CFD, you can buy however much of the CFD, and it actually has no impact on the actual ticker itself. You're not actually buying shares. It's almost like placing a bet. Hey, I think this is going to go up, or hey, I think this is going to go down. But it actually has no influence on the actual stock price itself. Same as the indexes and all that stuff. It actually doesn't actually touch the market. So yes, and they're very popular in overseas markets, yes. But in the U.S., it is actually illegal because there is actually no, my understanding, there is no regulation. But that's the firms that have failed in the U.S., the CFD ones. Now from there, the ones that are pretty popular right now is futures. And the ones we're talking about today is also just all futures. All right, so why do we use prop firms? This is a very important part. So they are beneficial for a variety of reasons. So back when I was I say back like it was a long time ago. I just recently separated from the small account mentorship, but I would always say tell the members there, like if you have a small account, look into trading futures. There's no pattern day trading rule, and especially if you only have like $100, $200, you don't need a lot of money to at least get started. So don't throw your $200 in a small options account where you're going to risk a $1-2 trade trying to get 20%, where you're going to get $20, and then you're going to like, oh man, this is going far. However, you can spend whatever amount at whatever firm that is less than $200, get funded, and then you could pull out whatever amount, a few thousand at least, before you take in a payout from that $200 amount. So I think it's a very great thing for small accounts. However, just like I talked about in the webinar, I'm sure all of you here watched the webinar, was if you have a large account, instead of having your money tied up in a trading account, you get to have your cash put aside, working in some other income source, or there's also a way to use it when it's trading as a business, and I cover that some at the end of the course. But there is a way where you can put your money aside and trade. I call it free of mind, because you know your bills are covered. And there's a lot of tax benefits as well, and that's also covered some more at the end of the course. All right, so I get this question a lot. How do prop firms work? So basically, kind of like it all says here, there's capital provisions where traders have access to a large pool of capital and they execute trades. And then a lot of times there is like a profit split, like profit sharing. Depending on what firm you go with, they'll have different numbers, and as far as profit splits go. And so that's all based on dependence upon the firm you go with. And there's always an evaluation process. So if we talk about the first firm I traded with when I was in Afghanistan, that process took me 8 months. It's a lot different now. I paid 11 grand and it took me 8 months. Now I could pay $50 and be done in 2 to 3 days or one day, whatever one you're deciding to go with. So the prop world has changed. And like I mentioned, they all have profit sharing, and there's always risk management. That's the main thing, because you think about it, you don't want one of your traders going on tilt, and then they're blowing all of the capital, and now the firm has no money, and now all the traders don't have a job. So, which would be bad. That one trader messed everybody up because he kept on dollar cost averaging or something. So that is basically how they work. Oops. Whoa, whoa, whoa. All right, choosing your firm. All right, so this one, I'm sure there's gonna be a lot of questions. Or actually, before I even dive into choosing the firms, any questions as far as how they work and all that type of stuff? Any questions up to this point? I forgot what CFD stands for. It's like Certified Financial Derivative or something like that. Yeah, I don't know. You can Google it, and there is a breakdown of it on there. Pretty straightforward so far. Okay. In my head, it seems relatively easy, but if there's a part that gets hicked up, by all means, let me know, and we can get that addressed. All right, choosing your firm. How many of you already have a firm account? Or I've already looked into some that you're messing with? Yeah, okay. All right. So we got Top Step, Apex. Okay, very popular ones. Nothing wrong with either one of those. Nope. Okay. Apex was Rhythmic. All right. Awesome. One of each. All right. Nothing wrong with that either. Okay. So, so I imagine most of y'all already know the rules and are familiar with it. That's awesome, and we'll continue forth in here. Okay. So, trade. Okay. Awesome. I haven't heard of Trade the Pool. Actually, Susie, you asked about that during the webinar, didn't you? But I haven't actually looked into them yet. I think I saw an ad for them, but I haven't looked at them yet. All right, so prop firms. All right, I get this asked quite a bit, and I am like, in my most, I would say this in the most respectful way. It is not meant rudely or anything, but you really just have to look into it yourself, because there is it's really trader preference. They all have different rules. Me, I don't care which one I trade with. I intend on actually having funded accounts all across all of them and just kind of rolling with it. But you really do need to like look into it yourself and find one that jives best with you. Because some traders are like, oh, I really hate Apex. That's fine. Don't go with them. Go with whatever one you like the most. And that's really your call. And I can't really tell you which one is best for you because everyone is different. What's really interesting now is there are some firms now that allow you, like it says right here, to go straight to funded. There is no evaluation process. You can go straight to funded. And I'll show you one of those here in a moment. However, there is a catch to where you have to where it does cost more, obviously, because you're going straight to funded. That's how they're going to get you to pay more for it. However, if you are skilled, you go straight to funded, and then, hey, there's no evaluation process, you're all of a sudden getting paid anyways. But there are some of those. However, you do have to pay up front for it. You want the goods, you're going to have to pay for the goods. Yeah, lots more. Absolutely. Yeah, it's significantly more, isn't it? Yeah. Um, all right, let's continue on. So here is a list of some with evaluations. So Apex, Top Step, there's Take Profit Trader, My Funded Futures, Elite Trader, all of these right here. And so here are a few of the ones with evaluation. That seems like they pop up every day. However, these are the most popular ones. So I can't vouch for all of them, right? I don't know. So do your own due diligence. If you're willing to take the leap in trying one that's with any of them, really, even if they're on this list, not on this list, any one you're willing to take the leap on, do your due diligence and accept what you're about to get involved with and go from there. But these are the main ones that are known out there in the world at the moment. Going from here. All right, so there's these ones, and there are some that are without evaluations. There's Fast Track Trading and TradeFi. So what I'm going to do with y'all today also is I'm going to purchase some evaluations, and because my goal is to live trade these with you as we or get them to the funded part and then get them to the so we're taking a withdrawal, right? Because that's the point here, and we'll get it done there. Take profit. I'm actually thinking I want to give this one a shot. I know a few, we'll call them, I know personally a few, we'll call them trading influencers or whatever. And he told me TradeFi paid him in 1 hour. And I was like, really? I'm interested in giving it a shot. So some of y'all may know Simba, maybe on, he's known in the Twitter space and whatever. And him and a partner created this company. They are new. However, they're taking payouts. He said they could run 100 payouts an hour is what they run in. So every hour they could pump out 100. That's what their system can control. So I may get these ones a shot and see how it goes. And then another one is okay. So there's one. This one is Fast Track funding. I almost took it. Almost took it off of here. So I am going to put like a star here because they could just be running into a weird slump. But what I will say is I have seen that there is some people that had a hard time getting paid from them. They had well, I won't say they had a hard time. They had to wait a while. So I've just seen it online, so I don't know if it's legitimate or not. It's just something to be aware of. Like I said, if you're looking to get involved with it, then just be aware of doing your due diligence and kind of going with there. But that is something I have seen across Twitter and whatnot. But this is one I may sign up with, or I might try Elite Trader Funding because I do have that big discount going, and hop in there and go with it. Oh, they have a booth there. Good to know, John. But I've just seen some of the stuff on there, and like I said, I don't know if it's legitimate or not. I just know some people were waiting on payment since I think it was September 19th, so a month today. I don't know if they received it or not, or whatever. I haven't really gone hunting it down. I just noticed a lot of it was being talked about, and I was just like, oh, okay, that's kind of unfortunate there. And what would Rich like? You find it helpful if there was a slide that listed the questions to ask as we're evaluating different firms. How many days? Okay. Okay. Well, actually, I'll show you all here. My goal here was also to pull this up. So I want to show you where to find the rules as we're talking about firms. Let me make sure. Was that end of it? Okay, how to set up accounts. There we go. I put this slide here to remind me to pull up the firms. Okay, so if we're going to talk about, so I talked about this one, right? I'm looking at this one or the TradeFi one. So if we go to evaluations on this one, so what are some of the rules you need to be aware of? Okay, so what you need to be aware of is some of the common rules. They're all placed right here. So let's just say I wanted to do the one-step one. This one has a max drawdown of 2,000. So what does this mean? So this is the one that that has the intraday unrealized profit trailing drawdown. So that is the one similar to Apex. It goes from account high to it moving down there. And then so this is something that would have to happen or as it reads your account high as it pulls back. Now, end of round, the difference here is, okay. Yes, thank you, Mirza. All right, so now this one is end of day trailing drawdown. That's two main things I want you to realize. So basically, this one right here, whereas unrealized profit trailing drawdown is similar to Apex. If you have end of day drawdown, is similar to Top Step. So, but the difference is so this one has a max drawdown of 2,000. Okay, so if you drop the account down $2,000, you lose the account. However, it has a daily loss limit of $1,100. So how does that work? So let's just say your account drops down to $1,100. You lose $1,100 total. Then your account will be automatically liquidated, and you can't trade for the rest of the day. You can't trade the rest of the day, and you come back tomorrow, and now you have $900 to work with before you hit that 2,000 drawdown. Now, say you lose the 900 from there. So from your 1,100 to 900, that's gonna be a max $2,000 drawdown, and that is when you would lose the entire account there. So that is where the main difference is there. Now, also another thing is some of them require minimum days traded. So this one particularly has 5 days. So what I personally like to do is like, okay, 5 days. And this comes in terms of picking your profit goal, right? Like how much should I kind of make a day? We just say the market's moving and you're in good sync with the market. And then you would come in and be like, hey, all right, I just take 5 days divided by 3. So that means I would have to make I would like to make at least $600 a day to be funded at the earliest is one way I look at it. But however, I like to at least get it done if at a bare minimum, personally what I do, the goal here is even if it's going to take a while, if it is going to take a while, then the goal is not to have to pay another subscription. So what does that mean? So that means you have 30 days, right? The goal, like ultimately, you don't want to pay more. You don't want to have to buy this again, basically. So in that case, if you're going to go ahead and just say you picked a 50,000, you have 30 days, so that's a month. Hey, you just have to make $100 a day. Oops, $100 over the course of a month. If you want to wait a month, and then you're funded. But at a minimum, that's how I like to judge my goal. Is like I just don't want to have to pay for the subscription again. If I have to trade over a month just to get funded, then I'm not being aggressive enough. Or I need to take a step back and try to evaluate something like something's not clicking. Because a $3,000 profit goal is pretty obtainable when trading futures if doing it correctly. No, it is only from realized profits. So this one, the end of day drawdown, only occurs it's based on closed trades. That's a good way to explain it. It's based on closed trades. So say you have an open trade and it's still just like going up, but then it pulls back a little bit and you close it. This doesn't matter because it's based on where you closed it. However, when you're doing the unrealized one, it's going to take your high up here. So it's only based on realized when you're doing this. So this is also trader preference on which one to really choose. Now we talked about the minimum days, the resets. All of them have a different cost on reset. Something I will say is like whenever they have discounts going on, sometimes it's better just to say you blew the account, it's better to just cancel it and then repurchase another one. So like you don't want to pay $75 for an account right here, and then it actually be, we'll zoom in here. Hey, you don't want to pay $75 to reset the account when all you have to do is pay $44 to buy a brand new one, when resetting is the exact same thing. So those are some things to be aware of. And then also there is always an activation fee for the most part. Like right here, it says you can either pay $80 a month for this particular company, or you pay a one-time activation fee. So one-time activation fee for them is, if you did the 50, looks like it's gonna be 150 bucks per account. So that is kind of like how it goes there. Commissions considered, to be honest, I don't even consider commissions when it comes to placing a trade. It's just the cost of doing business. So I really don't have an answer. It's not even a blimp on my radar, to be quite honest. Okay. So there's that. All right. So let's see where we're at in the slide real quick. I'll bring this over here so we get back here. All right. Any questions as far as like the account wise? Like as far as like things you need to look at before finding the firm that you're going to best jive with. Yeah, I can't give it, like I mentioned, I can't recommend which one to get for a beginner. If you're just beginning, I would say go small, really. Go with one that has like a $25,000. It's cheap, and you go with it. Um, so is end of day better? It really is trader preference. Like I trade, so I have Apex and Top Step. They're literally the two different options, end of day and unrealized. And I trade them the exact same. So I trade them the exact same. So I really can't say which is better because I don't let it affect my trading. I traded the setup the same way every time. It doesn't mess up anything. No, okay. So the activation fee. So think of it like so you're paying. So you pay for the evaluation, right? So you pay for the eval, and what was it, like 25 bucks? We'll just use that example. All right, cool. You get funded, right? Now they have like an activation fee to where you can either pay $85 a month or whatever it was, or that's a month, right? Or big or you could pay the 150 for, and then you don't have any monthly fees. So the choice is yours. And I know a lot of people are like, "Oh my gosh, that's such a scam." Well, when I was prop trading in Afghanistan, they called it desk fees, not activation fees or anything like that. It's called a desk fee, and I had to pay $200 a month. So it's a very well known thing. And yes, you pay an activation fee across every single account. Every firm has it. It's a business model. It's just the way it is. Nothing we could do about it. And then also, so like this Elite asks for 150. Right now, Apex, I believe, has, I think it's 35, 85. I don't know. It's on their website. Let's pull it up and find out. All right, so it's $85 for a lifetime with them, with Apex right now. So if you sign up under them, you only have $85 activation fee. So yes, it would be 150 across the 20 accounts if you did that with them. Correct. So that'd be a $3,000 investment for you if you did the lifetime. And if you, so after, say you blow your funded account, you will have to start from square one again. Basically, is the best way to look at it. You have to go ahead and buy the evaluation again, pass it, and then pay the activation fee again. So I know it seems like, it could seem like a lot. However, let me break it down this way. It's a business plan. Don't let it discourage you. So let's just say an example is you have your, let's just say in this example, you have 20 accounts, right? 20 accounts. And they were, we'll call it roughly $25 each. So that's going to come out to $500 for your 20 accounts. Okay, you're all right. You're already $500 in the hole. You get funded, and now you are at 3.5 in the hole for the cost of doing business. You are now at 3,500 whole. And you're right, it is tax deductible. That's when you could write the stuff off as a loss, or not as a loss, but it's a cost of doing business in your taxes, where you actually decreases your tax. That's how, at least for me. I'm not a I'm not a CPA. I'm not a tax professional, but that is what works for me. Disclaimer there that I have to say. All right, so where did the 3.5 come from? So you have 500 for your 20 accounts. You have 3K bill for your activation fees. So that is, I'll just put act. So now you're a total of $3,500 in the hole. Okay, so now you get back, and this is if you're doing 20. You could do 1 or 2 or whatever. The number amount is yours. This is the max you're paying, so don't let that bother you. All right, now you get your first payout. And say if we do the business plan that I have in here, where you're trying to take anywhere from $10,000 to $20,000 out, 10 to 40,000. Let's just say you have this 20, and then you have this, and then we'll say you take your first payout. So I believe it was you traded 10 days, and now you traded 10 days, and then let's just say you take out 1,000 out of each account. So that means you just got a 20K paycheck for trading for 10 days. So now you are 16.5 positive. That's the cost of doing business, right? Does that make sense? Like, I understand that this could be discouraged, but if you just get your account to the spot where you take 1,000 out of each account, that's a $20,000 paycheck, and now you're positive. And then you just keep rolling it this way. And every firm is different. So that's how all that works, and looking at it from that perspective, going from there. And this is only if you do 20. If you do 5, 1, 2, whatever, it all varies from there. Which one will allow you to hold over the weekend? Diamond hands or something? You have to check it out there. Okay, so a little disclaimer. So trading for prop firms is a wonderful way to make a lot of money with little upfront investment. However, like I said, you need to be an adult and look to each firm that fits you best. Like I've said this over and over and over, and I'll probably keep saying it because I keep getting asked which firm is best for me. I don't know. You need to look at which ones are best for you and then trade it from there. However, the trading strategy that makes you money works on all the firms. So that is ultimately where it comes from there, right? So it works on all of the firms. Now, which firm you go with is ultimately your decision. All right, so you need to trade both Apex and Top Step. Okay. Let's pay you 6,000. Okay. Payout number 3. Awesome, Steven. I love it. All right. Looks like most of y'all. Any questions about as far as all that stuff goes? All right. I want to say everyone is good. Okay. Yes, taking money out with brings down your drawdown. For trading equity and options, Vijay, there's a ton out there. Or I guess I can't say there's a ton. There's not a whole lot of them, but you just have to kind of like look into that as far as options goes. Right now, we're going to focus on futures. You could do it personal. Okay, so personal or a business name. If you already have an LLC, this is the way I went about it. Even when I started as a prop trader a long time ago, was I started off personal first, and then I was like, all right, if I get consistent, I will go ahead and if I get consistent, then I'll go ahead and open up a LLC because that's going to cost money, and then go from there. So I got consistent and opened up an LLC. So you can start personal and then go to the business side, or using an LLC or S corp or whatever is best for your state, because I know it varies from state to state. Is it going to be an ongoing thing, Chris? That really depends on y'all guys, to be quite honest. If there's interest, maybe. If not, hey, maybe not. And yes, there's no capital gains. You get paid as a contractor. Is how it goes. So that's how that kind of works there. Get 1099. Okay. All right, so let's continue forth. Okay, so I'm going to ask y'all this. Does everyone have their prop firm account? That's what I want to ask. Is there anyone that has not received one yet? Okay. Okay. If you have not, have you done the research to find out which one you would like to go with at all yet? Like, there's no, I'm not telling you to go do it right now. I was just simply trying to get a feel for kind of like what's going on. Okay, so for those of you that do not have it, I can't pull it up and show y'all it because there's not, I don't have, like it's a one-time thing. But what I do want it to explain to y'all, because I can imagine this is going to be an issue with some and the questions pop up, is after you sign up, which say you sign up with Tradevate, that's what I personally use, right? And I just know this happens. So you have Tradevate. When you first sign up, you're going to open up your Tradevate app and you're going to be like, oh man, this isn't working. Right? Why isn't it working? And then from there, once you get funded, you're going to open up your Tradevate and it's not going to be working. So what you have to do is you'll have to go to Tradevate.com, and this is where you sign your data fees, or not data fees, but your Tradevate. This is where you sign your data form, right? Because you have to sign out on all of them. So you have to do it online first. So you'll go to Tradevate.com, and when you log in, it'll bring up the form you need to sign. And whenever you pull that up, you sign up, sign the documents, and then your Tradevate application will start to load. It'll let you get in. So for me personally, I have Tradevate, and then I download their platform. Their platform is downloaded on my desktop, and I use that on my computer to trade. If you wish to trade on the other ways and all that other stuff, that is fine. That's y'all's choice. Obviously, I'm not here to tell you how to place your trades, but that is how I personally do it. And I just know that is a hiccup a lot of times is you need to sign your data forms where you're declaring professional and non-professional, and then go from there. And yes, you could be non-professional as this continues on. So just wanted you to be aware of that once you log in, and once you sign up if you haven't done so yet, and that's where you sign your documents. It'll be the first thing that pops up. You do that before you even place a trade. The Tradevate won't look appropriate for it. All right, I'm gonna go through the questions here real quick. Because you can't use the trade copier on Tradevate, or sorry, on TradingView. Okay, and so you created an Apex account first. It created a Tradevate account for me, correct? No, no, no. You do not need to create a Tradevate account. The firm you go with will give you the account. You just have to have your stuff to sign in with to sign the data forms. So I'm gonna get Tradevate up, or sorry, I'll get my other ones up over here. So I'll pull up Tradevate, and then I guess I won't open up any accounts right now because it seems like everyone has it. The main reason I was thinking about opening them up was really just to if there's any hiccups along the way, but it seems like everyone already has their stuff, so then there's nothing to show there, and go from there. But no, you do not. I declare non-professional. Please do it. Open it. Oh, sign up with an account, but it doesn't like. Okay, you want me to sign? I'm going to ask you real quick. What does that help you do? If I sign up, this will be my username and password, which I'm not going to show you on the screen. I'm going to buy it, and then boom, it shows up. I'm trying to understand what it would help with. That way, I give you what you're looking for. Because I'm not going to show you my username and password, not my address, not my credit card number. Like if that's the parts that then it just boom, you have an account. So I'm trying to understand what's going on. Actually, here we'll do this. Let me do this real quick. Okay. Let's go down real quick. All right. All right, so if you're signing up for LLC or using LLC to sign up with your own name, every firm is different. It is under their frequently asked questions there. All right, I'm going through the chat real quick. Same level. Oh no, absolutely. I'm going to be starting them up free. Here, let's let me confirm here. I'll just buy some real quick. Hold on. Let's see which one I'm gonna rock and roll with. Okay. All right, so I'm going to try the quick one. Actually, I'll pull this over here. So I'm going to look at this real quick. I'm thinking about testing out their 1 hour paying structure here. So first thing I do is I look at the rules. What can I do? And this is the TradeFi one. All right, so they have the 50K, 100K, 150K. All right, how much it is per month, the profit goal, how many contracts you change. Daily loss limit is none. Trailing drawdown is 2,000. Okay. The trailing drawdown is intraday, so not end of day. You have 1 day to pass. Reset is 45. Pretty sure they have a discount going on. I'll have to look real quick. And then what's growth? So you're paying double. They have a soft reach. So this is like the Top Step version. And then this is one where they have the straight to funded. You see how much you have to pay for it? So if you wanted the one-time fee, so there's no activation fee, but you go straight to funded, then you're gonna pay $700 for it. It's interesting. Pull this up over here real quick. Yes, you can use multiple accounts during the evaluation period. That is correct. All right. I saw they had a discount somewhere. Guess not at the moment. So they help. Oh, it was right there at the top. Okay. That's right there. All right, 55% off growth and then 40% off straight to funded and use code SPOOKY. Okay, so that's cool. All right, so I want to use that. And then I want to know, so like there's some other rules, right? Let's go to the help center. All right, payout withdrawals. What are the rules? Advance and growth. So traders receive first 100% of their 15,000 and then 90 after that. Traders can receive a total of 7 accounts. All right, cool. Payout approvals require you abide to the trade file. Okay, got that. All right, they have a consistency rule. This is something that kind of catches people off guard. Consistency rule. Consistency rule says that, okay, so it says 35%. So consistency rule means I can't take a withdrawal unless only if my largest win is 35% of, or is 35% or less of out of all the profits. So what that basically means is, say you're consistently making 1K, but then all of a sudden you pull out a 3.5K or above it, we'll just say 4K actually. If you do a 4K, then you're not going to be able to get a payout because you broke the consistency rule. And that's how this is one way how they get you. But don't worry, don't let this discourage you, because this trading strategy is not based on letting runners run for too long. That's why we take them out at the highs. So as far as the setup goes. So this actually does not bother me. I'm pretty consistent on my goals, so this doesn't bother me, but it's something to be aware of, because sometimes people get lucky and catch a huge winner. They're like, oh man, and then they can't take the payout. It's because they broke the consistency rule. But if you get a consistent, say you break the consistency rule, say some market, say on news you didn't know or whatever comes out and you make, we'll just say 14 grand, right? You're consistently making 1K, then bam, you make a 14 grand day. You're like, man, great. Now I'm not gonna be able to take out a payout. Well, what you can do is, don't worry, the profits don't go away. You'll just have to trade a few more days to like kind of level it out, and it's still there. Just stay consistent and then keep going with it, and then you still get the payout from that big day that was nice. And if anything, like a lot of people get discouraged by it, but don't let it discourage you. That's, hey, congratulations, you had a big day. It's not going to go anywhere. Just keep trading until it kind of levels out. It doesn't go anywhere. Your profits are still there. It's Our consistency rule is, say, out of the entire time frame up until you request a payout. So out of all of your trades up into the payout, it can't be greater than 35, according to this firm. Apex does have a consistency rule, and theirs is also 30%, 35, something like that. And then Top Step, their consistency rule, theirs is a little bit different. Theirs is that you could only take out 50% of your total profits up until the first, I believe, 30 days. Not 30 trading days, but 30 days of the account being funded. And no, most of the time you don't pay for data fees. They offer it to you for free. A lot of it's not free on the website as well. So I'm gonna see. So this is just stuff you look at. So yeah, they say you have to trade a great 5 days or more. Okay, greater than $100. That's pretty common. That's on Top Step as well. It tells you the time, the threshold. Okay, a lot of them have account maximums for payouts. So okay, so this company has a payout window. I hate the payout windows, to be quite honest, but it is what it is. You want to play the game? That's what we have to play. Okay, where am I looking for? Here it is. All right, the payouts. All right, so here, this tells you the maximum, this says the minimum payout amounts are, okay, the minimum payouts, usually there's a maximum payouts dependent. Okay, here's the maximum. So usually when you have the 50K, they say you can only take out 150 on your first payout, and you take 117 all the way up, and then that's where you can take out um, all of them. And then it looks like once you get to your 6, it can amount up to 25,000 per account. Interesting. But when you have more than one account, this adds up. Like I said, for mine, when I'm trading 20, I just take out 1K per account. That's it. Let me see this one again real quick. Go to the chat. All right, that's a good question. Does a consistency rule change when you're funded? See, when you're funded, no, that is based on the payout. So when you are funded, there is a little bit of a rule. It's all on their website and the help center. It's all on their website. Most of these questions are literally on their website, and it varies from firm to firm. Okay, going through the chat real quick. What does it mean trading data pass one day? It means you can pass in one day. So if you did the 50K and you got the $3,000 profit in one day, then boom, you're funded. Some of the other ones have 5 days, 3 days, things like that. So that is really what it means. All right, I'm going to compare these two real quick, because if I'm going to do, I'm feeling like I want to grab 20 accounts. Okay, here. Okay. So this is what I'm going to do. I am going to go over here. I'm going to grab some of these accounts right here. Okay, so I'm going to come over here, and then so I'm going to go grab some of these right here. I'm going to grab the one step where it's at the high. This does not bother me because I don't let my trades go like this. I don't So if the trade goes like this, I don't really hold through the pullbacks really, or a big pullback. I like to get out at the highs and I just keep taking those base hits. So I'm gonna grab 20 of these real quick and then I'll show you how to set them up in a group trade. So I'm gonna go ahead and move this on over here. So I don't need y'all stealing my info. I know how y'all be. I already got enough emails and letters coming in the mail saying someone's trying to hack my stuff. All right, so when you sign up, a lot of it has this, there's always agreements, right? Always some type of agreement. So if I'm going to use this one particularly, scroll down, bam, bam, and then I personally use Tradevate. Boom, got it. I move this over here. Okay, so what is this going to cost me? This is going to cost me $24.75 per account. So right now, I'm just going to sign up for one, and later there's no reason for y'all to sit here while I sign up for all 20 all by myself. But I'm just going to go through and buy this one. I'll go from there. Actually, before I do that real quick, there's like one question I got more on this real quick. I'm reading through the thing quick. Okay, so this company here, so the other one had this one has a 40% rule. That's not bad at all. And right here they explain it all to you what exactly that means. They pay you on right, all right, payout process. All right, trade activity, subscription, rise onboarding, okay, payout request. You can expect your payout approval to occur daily, Monday through Friday. All right, cool. Profit split, first 12.5 is yours. All right, payout structure, first pay cycle. So we did the 50,000. You can take up to 2,000 at one time. All right, the fourth one's cool. All right, at least $200. All right, you must complete 10 active trading days. Okay, 40% consistent rule. Okay. All right, cool. Yeah, I'll roll with them. I wanted to make sure there was no crazy little sneaky thing, and there's no. It doesn't look like there is a request a pay cycle. So it looks like once you just trade your 10 days, and then you hit all these parameters, and then you can request your payout from them. So I'll go ahead and sign up for this. I'll do some more elite trader fun in there. I'm about to get into all that, setting up the trading view stuff. But there seemed to be a demand that I buy an account right now. So, but I will, actually, I know what I'll do here. Let's continue forth. I want to grab a few real quick so I can show y'all how to do the group. How do you group your trades? So you're just clicking once, right? So just grabbing a few real quick. Actually, I didn't even see. Oh no, oh, that's the wrong one. Hold on. All right, I'll give that a few minutes to load up there. Yeah, I'm saying like this is already taking longer than I expected, but I promise y'all, most of your questions are literally on the website that you're looking at using. I'm just waiting for a few of these to pop up, letting them be added to my account. Sometimes it takes a few minutes for them to pop up in your account, so then you could add them to the thing. So we'll continue forth. And yes, TradingView, I am going to walk you through how to completely set it up the way I have it set up. Okay. Get this one all the way here. Okay, so I just grab 3, and then so once that gets added to my dashboard, I will go ahead and show you how to group them. Where is, there it is. I got that question quiz. Okay. Continuing on. I'm gonna log in real quick to see if they added them to Tradevate. So actually, got to group them. This is actually a very simple process. Just a few buttons. It's like literally a click and drag. Oh, okay, let me fix that real quick. All right, cool. All right, so once you get all your accounts put up, this is how I personally trade on my Tradevate. So the way I set this up right here is you come to this little add modules right here. You just click here, and then you click Dome, right? Super Dome, bam, and then this adds it to your platform. All right, there it is. I was like, where did it go? Let's just say I wanted to trade, I don't know, bonds or whatever. Then select, okay, it tells you that, whatever, just hit okay. And then whenever you want to add this to your thing right here, actually, you know what? I think I could save this and share it with you all in the room drive. I'll actually just do that. I didn't think about that for this one. So this is what I use to execute my trades on, actually. So all I'm looking at on the chart is a look like this, and all I do is click. This is all I'm doing. Click, click, click. So I have my ES, my NASDAQ. Right here, I do have Bitcoin. I was kind of looking at it a little bit. Haven't really quite traded it yet. I was looking for something that's moving. And then I have the YM, the Russell, and then I have gold and oil. So this is all that I trade here. And I'll actually save this and have it put in the room drive if this is actually something you're interested in doing or trading that way. So this will put it all like that in there. You're lost. What are you lost on, James? So we signed up for an account. You open up Tradevate, and now we're going to sync the accounts. So right here at the top where it says the accounts right here, You go ahead and click it. You come on down to manage groups. And then right here, you have to name your group, right? Because we're grouping the accounts together. This one's going to be like my YOLO, right? We're going to YOLO one right here. And then from there, here are all the accounts that are available. And so whatever ones I want grouped, all you do is click and drag and click and drag and click and drag, whatever accounts you have. So in this case, I have 1, 2, 3, 4, 5, right? Okay, let's just say I want these 5 accounts. From there, you have to have you have to know that the quantity that is noted right here, it's 5, right? And I'm trading 5 accounts. And also you want to make sure that you have this highlighted. You go to yellow, boop, and you see how it puts it right there? That means I'm trading the entire group. So if I was to go ahead and click buy right here, right? And I set it at 5, that's going to send 1 contract to each of the accounts, right? Right here, if I clicked buy or sell or whatever, it's going to send 1 contract to each account. If I wanted 2 in each account, I put that at 10. So you have to do it in multiples of however many you group together. And that's all it is. I'm just clicking once here and it's dispersing it across all the accounts there. I do trade the NQ. That's what that is right there. I don't sit brackets up on Tradebait. No. Oh, and the reason I didn't go into too much detail here, James, because I'm actually going to save this layout and I have it put in the room drive, and all you have to do is upload it. So you don't have to do the legwork. You just upload it. But you hit the plus sign, hit the dome, and then you just, if you wanted to do it manually, where'd it go? Come back. We'll just say, like I said, bonds or whatever. Or it's copper, sorry. See, you see how much I trade it. And then from here, window, full size. See, click it. Oh man, how do you add it to that then? There has to be a way to do it here. Apparently, I do not remember. Full size, new window. Okay, I know what I did there. So you can hit the tab right here. So you open one DOM, right, or dome, and then you just put it here. So it would be like HG. And now I have it right here. So here's copper. So you open one. So if I was to go here, Superdome. Now I see what I did there. Come back. Let's just say I wanted this one to have the ES. All right, so here's one. Now I want another one. I click here. I want the NQ. Bam, boom, bam. So now I have both right there, right? Now, to add another one, I click this, Superdome, Dom, and let's just say this one's going to be my Russell. Click, click. Where did it go? Oh, I thought I would have added it to this. Hold up, something ain't working right. Okay, gotta take it out. There we go. All right, so how I did that was I hit the toggle button right here. So hit toggle, and move it here, right? And then say I wanted like the Russell like we talked about. And if I wanted to take it out, I just click up here on the tab, drag it out. Boom, there's that. Then I'm still toggling. There's my NQ. And then if I want my oil, sorry, not that one, but I'll click here. Say I wanted oil, CL. Let's say we're going to trade this one. Then I click and drag it out right there. Bam. So there you go. Now it replicates it right there. So hopefully that helped you out there, James. So we set up there, but I'll actually save it and just have it put in the room drive as well. So you can upload it if that is a route you wish to go. So we covered doing the group trades, covered I don't want that there before I accidentally click a button and buy some copper. Okay, so we talked about the firms, talked about the group trading, and then let's see what's next. Okay. Up until this point, questions that are not already available on the firm websites. Is there any other questions? Hopefully that helped you out there, James. Walk you through it. Some there. The level 2 data feed, where are you getting that from, Brett? Because most of all the firms offer level 2 data feed for free. I guess that may be dependent on where you're looking at, because I am purchasing. Yeah, I don't. Yeah, I declined it. I don't use it. It's a group trade. So if you have 2 accounts in a group, you have to do quantity set to 1. If you have set to 1, John, you won't be able to place the trade. If you don't do it in each, so think of it this way: all your accounts are grouped together, and it's just dispersing it across all of them. If you have 2 accounts grouped and you choose one, it actually won't submit the order. It'll tell you you have to do it in multiples of the amount of accounts in a group. So it actually won't even submit it. It will tell you, hey, I can't do this unless if you have 2, you would at least have to have a quantity of 2 in there. That's what would happen. And if you put from Stoic Trader, if you put 5, it's 1 contract in each account and not 5 in each. That is correct. And yes, you can absolutely scale out. So typically what I do, if I put in more, um, if you put in like, say you put 10 and you want to scale out in 5s, yeah, you could just change it to 5 and then scale out along the way there. So you could absolutely do that. You do not have to set up Tradevate separately. You just have to sign up under the firm. Okay, cool. And let's see. I believe so. They're Martini 100, but you'd have to like check it out there. All right. So we've been going on for about an hour and 15 minutes. With DOM settings, they're. What do you mean DOM settings? I'm not aware there are settings. It's just using it to enter the trades, I guess. It's just regular DOM. All right. So, what do we want to do? We're going on for about an hour 15. I'm going to give everyone a 5-minute break to get coffee, stretch your legs, do whatever you got to do. And then we'll continue on. And already at this view, I can already see that we're going to be going over time. So do not worry. We're going to be going over time, which is fine. And all here for it. But like I said, a lot of the questions that you are asking are available on the website. Like that is something you're going to have to go and check out, because we still have to set up our trading view. We still have to go through setups. We still have to go through all of that. And good or bad, y'all are stuck with me for the next 3 weeks to 3 months. So let's come back at set 5 minutes. So we'll go at 11:20. We will come right back. Okay. So 5-minute break. Come back at 11:20. And then smiley face. All right. See you in a minute. And I'm back. All right. So you need seconds for the or premium for TradingView? Okay. I was just looking at it actually, and I was trying to see which one because I did see that they both have the Renko charts. And let's see time. But I do have the premium for $50. But TPO, oh, the second base charts. Okay, so you will have to go premium if you want to use the premium or the second charts. All right, we'll cover that more whenever we get going there. All right, excellent. Thank you, Mirza. All right, so continuing on, and if you are confused, do not worry. We'll get you all squared away. I promise a lot of the things that have you confused, like it will all make sense as time progresses, and also it's all there. All right, so we've got a few minutes here. All right, so I'm going to assume everyone is back and ready to keep on going. So the futures market. All right, so what exactly are futures and everything like that? You can trade futures on almost anything really. Like there's like it says, oil, gold, there's wheat, coffee, natural gas, all the indices, currencies, interest rates, bonds, which is insane, right? And there's even crypto futures contracts. So basically, in the easiest way, when I explain this to a new person, when you're trading futures, it is all the same as it's like trading a stock. You buy it at a certain price goes up, and then it actually, then you're in a profit. If you're short, price goes down, you're in a profit. The only difference is like the tick value. And I want to pull something up for you. So who here is not familiar with like tick values? Let me get this all put away here. Okay. You're not familiar with tick values? Okay. So I'm familiar with tick values. I'm going to go ahead and just pull this up because this is where most answers come from. All right. So a tick value. So whenever so the E-mini, right? It doesn't move in like 1 cent increments. It moves in um like quarter cent increments, like a quarters, right? It goes like 0.25. Right. So the best way to look at it is you're trading the ES and then it moves 0.25, like only a quarter. Like if you want to think of it as in cents, it moves 0.25, then actually that 0.25 has a value of $12.50. So depending on your contract size, obviously it means that this basically tells you how large of a position you can put on. And so for me with this strategy, if we're doing the 50K accounts, I honestly use 1 NQ, and sometimes I'll use 2 to 3 ES, and if it's the YM, I'll use 2 to 3, and if it's the Russell, then I'll use about 2, and if it's oil, I'll use about 3, and if it's gold, about 1, because gold could move all crazy. But if you're wanting to know the tick value um, of all of these products, there is a reason why I did not just like make this big old checklist and give it to you. And this goes back to how whenever I was an instructor. Yes, 4 ticks is 1 point on the ES, Steve. That is correct. Okay, so the reason I did not print up, and this goes back to whenever I've been an instructor for a lot of different things. I was a paramedic instructor. I was a lead medic as the contractor side of things, where I had to get everyone up to speed and train everybody, and continuously tested them and everything. And all that being said, like I'm a tactical small unit leaders course instructor. I've been like all kinds of stuff. And what I've learned over my years of teaching, if I just give you the answer, you will not remember it. So every time a student comes up to me and asks, "Hey, Cody, what is the half-life of Versed or whatever, like a medication, right? If you're unaware of what that is, if you don't know what all that stuff is, and I give you an answer, you're going to forget it. However, what I always told my students were, "Hey, I would like you to go look it up. Look up the answer. Look for your answer to your question." And once you have the answer to your question and you still have questions or it sparks another question, come to me and we'll have a conversation about it. And the reason I do that is because you will remember it instead of me just handing it to you. You're going to forget it. And then you're like, oh, okay, cool. Just kind of like, um, and then you just won't remember it. So don't think it's, I don't want you to think it's me being mean or something like that. It's really as that is the best way to really obtain and remember the information being given to you. Everyone here has internet because I know that because you're here. Everyone has Google. Go ahead and Google it. Look it up a little bit. There's a tons of websites that break it down. There's charts, even things like that. But I want you to do a little bit of the legwork um, to to actually learn it. Like I am serious about you actually learning to do this where you don't need me. And so this is just one of the working things you have to do in order to get there. So that is essentially what a tick value is. And every futures market has a different type of tick. A good way to look at it too is I'll pull up Tradevate again. If you're unaware of how it moves. Nope, wrong button. Okay, so like, since I was like, wait a second, that don't look right. Okay, so I get that out of there. Goodbye. Okay, so here's the ES, and you look right here. You can see where there are. Right here are the ticks. You see how it goes in quarters? So, you know, like 0, 2, 5, 50, 75, 1, and that equals 1 whole point. And here's the NASDAQ, moves similarly, except it has a higher value. And the NQ moves like this when it goes, when it's all over the place. It's like a buck and bull, really. Um, and so you see that moves there. The Russell, and then let me have to get rid of that. The YM moves a few points. Oil is probably the easiest to remember because it moves like cents. Think of it this way: each 1 cent move is $10. Think of it that way. So one whole quote unquote dollar move is actually $1,000. So that's oil is pretty easy to remember. So 1 cent actually equals $10. Um, and then gold over here, you see it kind of moves in cents as well. So it's kind of like the best way to go about it. Yeah, you do not. You have to. So that's. I'm glad you brought that up, Edwards. Let me actually. I want to bring this over to the main screen because this is what I was talking about earlier in the beginning. So, thanks for sharing this. So, if you sign up and you have this yellow mark here, what is going on right here is you don't have your data signed up yet. So, with whatever firm or whatever you're using, this usually happens when you need to sign either the data form I was talking about. If it looks like this, you either have to give it about 20, 30 minutes, or it's usually 20, 30 minutes after you sign the data form. So that's when you go to Tradeovate's website, log in, and that's when they give you the forms to sign. So if you have this, you just have to wait a little bit. That just means you have delayed data. Bye, MSG. Thanks for hanging. So that did you catch that, James? Okay, cool. Yeah, so that's usually what you got to do there. That's a very common thing. Okay, so we got that. Let's go over here. And the strategies we're about to cover are covered in everything. I know a lot of this seems like logistical work, and to be quite honest, I didn't think it was going to go this long over the logistical side, but I get it's a new concept for a lot of individuals, and we're here to make everything clear. So that's the futures market, where all of these firms, for the most part, require you to day trade. So you will be closing these beforehand, so you don't really have to about um, rules and all that stuff. All right, so we're about to get into TradingView. Oh, there was one other thing I wanted to cover with y'all. And this actually hit me this morning, and I was like, "Oh, I didn't put that in the class, but it's something I should cover." Is the contract's front month. So we're always trading the front month. Okay, and so how do you identify the front month? The front month is what is the front month is so first off you go so when you put it in a stock like Amazon's like AMZN or Tesla TSLA or whatever, right? Um, futures market has uh, specific tickers and it goes like this. So when I first learned this, I was like, that's kind of weird, but it is what it is. So you have the ES for the E-mini S&P 500, right? The Z is the months. I'm breaking up in sound. Oh no. Okay, 1 second. How about now? It's only while I'm talking. All good? I'm not sure if you're messing with me, JR. You've been hanging out with Beat Navy over there? Scratchy? Oh, come on. I do. Okay, give me 1 second. Let me. I'm gonna unplug this and plug it back in real quick. Dare I ask, how about now? Interference from another device? I'll move my phone just in case if that's kind of what's going on. Better? All right, well, you know what they say about front month. Don't talk about front month, right? Not better. Hmm. Exactly. A bit better hearing static. Okay. It's interesting. Well, let me fix this real quick. I'll mess with this up here real fast. Yeah, I moved my phone out of the way. Shouldn't be anything else. It's kind of I didn't move anything whenever I started talking. There's a little bit of static. Okay, we'll see if it fades. We'll just keep pushing. Um, but I moved my little coffee cup away. The phone's across the room. Let's see if this works here. See if maybe it fades a little bit, but we'll keep going here. I do not set stop limits, KR. All right, so first rule about front month is you don't talk about front month. So like I was saying, this is the ES here. It might be my computer. I noticed it's flickering right here for whatever reason. Like this isn't supposed to be flickering. So I don't think it's the microphone or anything. I think it's actually my computer. But all right, so the Z is the month and then the 4 is the year. So in this case, it is ES and then Z is it's not this particular month, it's the month with the most contracts. So if we were to actually look at that and scroll down, so right here you see December has the most contracts and everything's starting to slowly move to March. Whenever all of the volume here moves down to March, this will change to a different letter, and that's all it would be. So it'd just be like ES. I forget what month, what the month letter is, but it'll be here. And Tradevate even tells you. Tradevate tells you, hey, there is, hey, it looks like all the volume's going to this other month. You might want to consider doing a contract roll. So that's really cool about Tradevate is it tells you. And much clearer. Okay, yeah, my computer's fans calmed down a little bit. I don't know if Windows all of a sudden decided to start doing an update or something. All good? Okay, I'm glad it's better now. But that is all something to be aware of. But Tradevate tells you it. It even gives you, being able to answer your question, even gives you the suggestion of what it tells you all the volumes moving to the next one, and then it'll actually tell you where all the volumes on the next one. So you just put it in there. So Tradevate does it automatically. It pops up, tells you, and then you just go ahead and put it in there. And then yes, you will manually change it. You just type it in, but it tells you what to change it to. Going through the chat real quick before we continue on, because I know we're about to pull up Tradevate. Oh, sorry, TradingView. If you want to use the way I am doing it, Steve, yes. And I'll show you. Before you go purchasing everything, let me show you what I'm using on TradingView, and then you go from there. How can you trade minis it's a $50,000 quote unquote account, Robert. It's not actually a $50 account. All right. All right, so we'll continue on. That's something to be aware of, and it will happen in the middle of the live trading. And so whenever that happens, it'll be a good demonstration there of how to do it. Yes, and the platform does alert it to you when to change it. And yes, they could be set there, Bob, on Tradevate. All right, so tools needed. So let's get to the chart side because there's a lot of TradingView questions here. So this is what I use, and this is why I use TradingView. Unfortunately, it has to be on TradingView really because Thinkorswim, believe it or not, is not meant for day trading. Thinkorswim is an options trading, even premium selling charting platform. That's what it was built for. That's what it does. You can use it for day trading to um, a certain part of it, but it's not all calculated correctly because that's not what it's intended for, right? That is why, how many of you have traded on Thinkorswim whenever the market starts to go crazy, then it freezes? Because it's not really meant for day trading. It doesn't have that kind of speed. People do use it for day trading, and there's stuff like that that can happen. However, that is not what it's used for. That's not what it was intended for. Does anyone know? I'm sure someone in here knows who created Thinkorswim. Who are the creators? I know someone knows the answer. Who created it? Right. Tom Sosnoff and I forgot his real name actually. I'm talking about Tom and Batista did. They created it together and they sold it to TD Ameritrade. Right? Those guys, what is their primary trading strategy? What do they do? Right. They sell premium. They're selling things 45 days to expiration. It is a slow process to trading, which is fine. It works great for them. They do great on it, right? However, it doesn't actually it doesn't actually fit the day trading narrative. That is why I don't like using the anchored VWAP on Thinkorswim. I don't like using the regular VWAP on Thinkorswim because I've noticed it does move whenever you change the time a little bit. I don't like that aspect to it. I want it to give it everything to me um, as it actually is. So the things being needed are going to be the time charts. So I do use the 1 minute up to the daily for analysis. Higher time frame down to 1. We will cover that as time progresses. Something new that I imagine many of you know little about, I would assume, would be the wrinkle charts. This was actually new to me too, up to a few months ago. However, to me, it takes a lot of the noise out in the day trading, and to where I could actually just see what's happening and just trade it. And for me, it takes the noise out. And if the noise is out, it's a much cleaner read, and it's easier to keep going. And whenever we get to when I pull up the charts and everything, I really think I think y'all will understand why I like it. And especially once you start trying it, I think you're like, oh wow, this is kind of neat. When I started using it, I was like, oh, this is kind of like a kind of cool. It was eye opening for me. Um, all right, and the moving averages I use these on my time charts. So the moving averages is the 21 EMA, 34 EMA, 50 SMA, and 200 SMA. I use these on my time charts, which I'll show you how to set them up in a minute. And then on my, and these also right here, I have this set on 1 second. I did recently start trying the NQ on the 5-second, and that was actually, instead of it being so sporadic, it wasn't too bad, to be quite honest. So I may just keep using the NQ for the 5-second, but everything else has been on the 1-second and has been very clean. VWAPs. I use the volume weighted average price, the session VWAP. So the session VWAP is defined by from the time the market opens at 5 p.m. Central all the way to the close. So I use the session VWAP, and then I use anchored VWAP. I do get asked a lot, where do I place the anchored VWAPs? I cover that later on here, where to anchor those prices and also how to trade them. I do use volume profile on the hourly chart. I'll show you how to do that as well here in a moment. I use that, and I'll tell you the why as well. And then I use something that's kind of new. It's called Super Trend. It's similar to the trailing ATR. However, it has a little bit of a smoothing factor to it. But I use it the same way you use a trailing ATR. And once we get to the setups, I'll cover that. Okay. All right. So this was my setup with the Renko charts, right? So this is how my charting setup looks. So typically how I kind of put it together is I have my 1-minute chart, like it says right here. And then right here, I go all the way to the daily, and I keep clicking, narrowing it down. And then I keep it on the 1 hour to 15-minute time frame, watching how price moves. Right here is my volume profile. And over here, I have the 1-second Renko charts, which you can see Renko Ringa means brick in Japanese. So they move in squares. And I'll explain a little bit more on it whenever I pull up. I have a few more slides on these. But this is what it looks like. And then here is my super trend. So in a nutshell, the way this works is, let's just say, okay, you see all these moving average trending lower. All right. Super trend flip negative, comes down, you catch a rally up, you get short, stops on the other side of the super trend, and then when it gets a flush down, like you close it up, comes back up, you get short again, get another flush, and then you lock it up. Or if you wanted, I mean, depending on how you want to do it, you just get short from here and you hold on the whole move till it flips if you wanted. It's really trader preference, but that is this is my setup with the Renko charts, and it kind of smoothed it out for me. So this was it without the Renko charts. And there was just a lot of movement in here, and I was like, this could be a little bit better. And so I just zoomed in some and got rid of the time, or got rid of the time charts or Japanese candlesticks, and put up the Renko one. And to me, it just reads much cleaner. I would suggest you to play with it some. I mean, some of y'all are not going to like the Renko charts, but that's fine. The ultimate goal is what's cool about this strategy is you can literally take it and then make it your own. And you could keep the Japanese candlesticks up if you want. If you don't like the 1-second charts, you're like, no, I'd rather trade 1 minute, 2 minute, 5 minute. It really doesn't matter. It's up to you to decide what works best for you. All right, so what exactly are Renko charts? Renko bar charts are a unique type of chart used for technical analysis, particularly popular in trading. Who knew? To filter out minor price movements and focus on significant price trends. And whenever I show you the settings, I have them set on the ATR. What's unique about the ATR is because it takes account for the current price action. Instead of it just picking a number and it moves random numbers, I like to set on the ATR because you're catching the current price movement and you're catching it, catching those moves there. And then will super trends still work with regular Japanese candlesticks? Nope, it works on any type of chart. So yes, it will work on regular candlesticks if that's what you wish to use, Thomas. But unlike traditional candlesticks and bar charts, Renko charts are not based on time, but on price movement. This makes them effective for identifying trends and potential reversal points. So I use them. They help me know when, hey, price might bounce here, I might get out of the way. And I'll show you what I mean. It's pretty easy to identify support and resistance with them because they just kind of stop. All right, key features to Renko charts. They have a brick formation, right? Renko charts consists of bricks, also called boxes, instead of bars or candles. The new brick is drawn only when price moves a certain predefined amount of the brick size. My brick size that I have set up is ATR. Here in a moment, I'll show you how to set those up. And then the price doesn't move enough to fill a new brick. No new brick is added. So if price is going sideways, it will not print a new brick because it is not moving anywhere. So it helps you know when price is moving. And bricks are always equal size vertically, but are either bullish or bearish. Anyone here use wrinkle charts before? Just curious. I was the as far as I'm aware of, I'm the only one that started messing with it. I've never played with them. I just started kind of like looking around. I was like, oh, I'm gonna try this, and then I'm like, oh, I kind of like love this thing. Not yet, Mirza. I'm gonna blow your mind. um, yes and no, a bit. All right, cool. I mean, give it a shot. See what y'all think. All right, so the brick size is the most critical parameter. Like it defines the amount of price movement that's going to require to form a new brick. Like it says here, you can either choose a specific amount, and then I personally use the ATR. Thinkorswim does have wrinkle charts. However, I will say it is not the same. I'm about to walk y'all through it. So do not worry. I'm going to show you how to set it all up. I'm going to pull up my trading view. I'm going to show you how to set up the entire thing. All right, so I have it on ATR, so it's that the movement is set to the current price action unfolding in front of us. So that's why I don't like the regular dollar amounts and whatnot. All right, and so like direction, a bullish break is created when price rises more than the prior break. It's simple enough, right? And a bearish break is created when price drops more than the prior break size. Pretty easy. And the breaks do not overlap. There is no time constraint. So if price stays within a certain range for a stated period of time, there is no new bricks. So if there is no new bricks forming, what do you think that could be a good sign of? You could use it as a form of assessment. Right, it's a sign of chop. If there's no new bricks forming, it's kind of like, you know what, maybe I should stay out of this. It's kind of like not moving yet. And what's unique about it on TradingView, I have it set up to where it blinks yellow when a new move is about to happen, and then you can kind of get a heads up on which direction price is currently moving. It's like a heads up. It flashes yellow, and I'll show you how to set that up. So it keeps you ahead of it. Um, but yeah, I'll show you how to set that up. But it flashes yellow, and whenever we do live trading, you'll see what I mean. It's also really good for trend identification. Wrinkle charts are excellent for identifying trends because they ignore all of the small fluctuations and focus on bigger moves. Continuous same color bricks indicate like a strong trend, right? So we have super trend, and then we have the wrinkle charts that combine the ATR. So we have the ATR moving a certain way, we have the super trend managing our risk, and then we also have a higher time frame setup that we look for to manage as well, right? Excuse me. So all right, mentioning continue the same colors. All right, and to get also identify trend reversals. Okay, benefits of using wrinkle charts for those of you that are unaware, because I get it when something new is presented to you, it kind of gives you a little bit of hesitation. They do reduce the noise. If you've traded the NQ before, sometimes when you look at like me, I'm a big candlestick reader, and I have candlestick formations in this class for you. Whenever if I trade the NQ and I'm looking at the wicks could be all over the place. And I'm like, whoa, and the NQ is very volatile and it would kind of like mess me up a little bit. I wasn't trading at the best, but once I went to wrinkle charts, there for a while, all I focused on was the NQ. You catch the NQ in a quick move for 40 points. Well, if you catch 40 points for one contract, that's about $800. And then so across a bunch of accounts, that's a lot of money. So it really helped me recognize those movements and filter out the noise. And I already mentioned like the trend clarity because they only move when the ATR is moving in a certain way, and it really is a simple setup. It makes them easy to interpret it, and especially for beginner traders, which is really good if that is if some of you are new. This I think will take a lot of the noise out because it almost looks like just a line, and if it's just a line is moving great, then it works. So I personally like using the wrinkle charts for training features. The main reason for training them allows me to see the direction of the ATR, like I mentioned. My risk is controlled by the super trend, and I have not. I've noted that with wrinkle bars, my stop is usually about 5 to 2 points on the NQ, which is a tight stop on the NQ. Usually, like the textbook stop on the NQ is about 20 points because it does move a lot. But when using the wrinkle charts and then the super trend, I'm actually able to narrow it down to 5 or 10. And so I'm only risking 5 or 10 points, but I'm still catching anywhere from 20 to 30 or 40 or sometimes even more, then the risk reward is great there. And the wrinkle star training is much more of a scalping technique instead of like trying to catch the overall trend pushing back and forth. Yes, Rocky, it is 11:51. I'm going to go over time. I already know it is. Once all the questions start pouring in, I know what we're going to make the 2-hour window. And if you have to go, do not worry. It is recorded. All right, so the wrinkle charts, whenever I'm scalping, I take 3 trades. If they're equally $200, that's about $600. However, doing time, you do have more risk, and then it will, you can catch one trade going that long, but however, it may um, have more drawdown and things like that. And also, um, each trading method has its own pros and cons, and it really is your preference. This style does go back and forth, and like it's interchangeable. You could do whatever one works best for you. Like I said, trader preference. If I'm using Renko, but you don't like Renko, you want to do 1 minute or whatever, that's fine. It works for the setup, works across the board. And so how I even started using the Renko chart. So this is how I even started doing it. Was so I was using time charts and all this stuff, and then sometimes I would get like I would take a loss, right? I'm like, come on, like you're getting chopped up. Especially the last few weeks, the market was kind of choppy. Well, not so much as the prior 2 weeks. I was like, man, but then I would use this. This is what my account revival strategy. I could be down $1,500, do my account revival strategy, and then I would climb it all the way back up to plus 2,000. So I would do like I'll be down 1,500 bucks or so, climb it all the way back up to plus two. So I'm make what was that double S about what $3,500 in a few minutes just doing this scalp revival, and then it hit me. I was all, so how about instead of having it as my account revival strategy, why don't I just do this strategy, and then I won't need to be reviving anything because it's what I'm doing because I had so much consistency with it. And then after that, after I focused on that, my consistency really did improve quite a bit. So this is kind of like where all the dots started connecting. So like I said, I started using the time charts, ended up taking losses and stuff, started doing account revival, and then I was like, man, quit focusing on the other thing, just do the account revival, and then I won't have to be reviving anything. Okay. All right, so here are the Renko charts. This is what I have it set up on. All right. So on TradingView, as we established, before we get into the settings here, it was noted that you do need, actually, let me double check this, make sure my personal information don't get out there. All right, so I do currently have the monthly premium set up on TradingView, okay? And also, you are going to need the live data for the features I'm looking for. So I want to screenshot these so I can show you what exactly I have. But I would just bring this over, but it unfortunately shows the credit card. And we don't want that. Awesome. Okay. Okay. So what we can do is we're going to do this. Duplicate slide. TradingView signups, I guess. What are you going to need, I guess? All right. So I do have okay, so that's I'm just going to shrink this down. So I do have the premium. And I am going to get asked, okay, so which data do you need, right? As far as like the CME wants like the exchanges and all that want their money too, right? None of that's not gonna be free lunch. Here are the futures markets I'm paying for right there. So I'm paying 63 with taxes and whatnot there, paying 750 there. And then here is the other one. So these are the three that I'm paying for. It's just the cost of doing business. These I do use these as a tax write-off. I do use these as a tax write-off whenever like tax season comes around. It's the cost of doing business. Ironically, I won't say ironically, but the tax codes are actually written. They want businesses to thrive because it fuels the economy. So this is the three setups that I have here, and go from there. Right, you don't need alerts, no. The second base charts and Rico. If the plus just has, if it does, if you, when I looked at it, it looks like you do need premium in order to get the second charts. However, like just check it out and see if it doesn't do that there. So boom, boom, boom. I see the CME group. Boom, US Stock Markets Model. Boom. Okay. Okay, so where do you find them? That is a good question. So whenever you pull up this stuff, it's kind of funny how I didn't want that to go over there. Okay. So whenever you go to your name when you sign up on TradingView, right? You can click on this little signal that's up here. You go ahead and then you go down to settings. And then when you scroll down, this is where you say get real time. And then you sign up under here. Here, it's a chart type, not indicator. I'm about to show you how to set it up. Just have to get you on the same page as far as what you need working first. Okay, so this is what I currently have. Like I said, I use Premium. Look at it, see if you use Plus. I use a CME group here, and then I also use NASDAQ and whatnot here. All right, so this is what I use for all of that. So we'll get this back up. Okay, and then go to F11, and then go. Okay, so here are the Renko charts. How do you get to this point? I'm glad y'all asked. So we're going to go start from scratch. All right, so what I'm going to do here, and I'm going to click this. I'm going to go new chart layout. Okay, so that's what it looks like. First thing I do is I go to this box right here. All right, and then personally, I like mine to look like this. So basically, the way I analyze this entire setup here is, where did my pin go? There it is. All right, the way I view this is I'm using this 1 minute time frame to find a setup that I'm going to cover soon. I use the 1 hour down to the 15-minute to kind of catch bigger picture, what's setting up here, right? So I see what's bigger time frame doing, cool. Then I correlate it to the 1 minute, and then I execute on this one. So that's kind of like how it works, and this is how I like to have mine set up. I do move this part over because I just find it's a waste of space there, and then also I don't look at it like that. I zoom out here. It's kind of like how I look at it from this point. So this is how I like to have it. Now, how do you set it up like this 3? That is when you come here, like I said, you click on the box and it is located right here. Click that, boom. All right, so now we're at this point. Unfortunately, TradingView doesn't allow you to share charting setups. That's why we have to follow along here. And if I go too fast and whatnot, like always, this is recorded and things like that. Okay, so we hit those boxes there. And then from there, what we need to do is, I like to clean the charts. So I'm gonna get rid of the volume on the bottom. All right, boom, boom, and boom. All right, And then to sync these charts so they're always the same thing you're looking at. In this case, right here, I like to have my crosshairs synced, and then also you'd have symbol synced in the layout here. So in this case, let's just say, since we're using copper earlier, we'll just pretend it's copper. And look here. And so now they're all synced, right? So when I change one, it changes all of them. So we're not quite done yet. All right, so we'll start with the 1 minute chart here first. Oh, first, actually, we'll do the Renko chart since that's what was in the setup here. So this little spot right here, this right here, that is where you change your candles. So this one, I want to be regular Japanese candlesticks, right? So I'll just change those to that real fast. But this is where you find just regular candles, actually. This is where you find Renko. So my big one right here, click right there. You go on down right here. This is where Renko's at. I'm just getting it set up to where you're going to have to look at it here. Ross, just click on the candles. Boom, there's Renko. All right, now we're here. No, they actually added wicks here, and I'll explain why. TradingView added wicks to their Renko charts because it tells you that price moved up and then the ATR. So you think about it, what's unique about this is, okay, so this one candle here was one ATR up. Well, TradingView made it to where their charts where they could have a wick, meaning price did push up and then came down. So why is that unique? It's unique because even if it was just a square and then a square, if you think about it, that means it had to move 2 ATR. Oops, this was ATR in order to make a red candle. However, when they throw a wick on it, that means that price did push up all the way, and then the ATR still came in and took it down. So it just tells you buyers are stepping in. It's one other way to look at it as far as that goes. Now, as far as the setup here, like I showed you, you just go to the candle, you right click, you go to settings. Up bars, I just have them set on green. Down bars, I have on red. And then projection bars, I have yellow. So yellow, when the market's moving, you can see it bounce around. Actually, you know what? Like, I'm not a big crypto trader, but isn't like crypto moving right now? Whatnot? Like, see if it could see if it's like moving around or something. See how it's flickering, or it's like yellow right there. Let's see if I'm doing 1 second. I don't know. Is anything moving right now? I'm not overly familiar with that side of things. Nope, that's not. So anyways, if I go to the day chart then, what it looks like when price is moving, what was that I clicked on earlier? Bitstamp here. See how it's yellow? That means price hasn't quite moved and closed on the 1 day time frame up here, outside this level here. So you'll see it intraday flickering yellow there. Use Binance, Dave? Okay, I'll give that a shot. So because I wanted to use it as an example on what I see there. So this one right here. And then I do need to go down. Yeah, I went to the, now I'm on the 1 second here. See that I know Dave trying to BT, okay. Just want to type in what Dave's telling me to do. He sounds like a man that knows what he is doing. All right, so you see how it just flicked yellow right there? And then typically what's happening in the market, we'll see it more during live trading. See how it went yellow and then boom, these are projection bars. So what does that mean? It means it hasn't closed yet. And then when 1 second happens, it when 1 second passes and it moved outside 1 ATR, that's when you get the close. So when we're day trading futures, we get heads up from the yellow, and then we could also correlate it to these, and it allows us to really finesse entry. So you see how you kind of get like the heads up. I mean, after this, it's kind of like sure it's going up, but where it's helpful is whenever price is flickering yellow right here for this pivot. So say it's coming down and you start seeing yellow pivot flicker right there, that's a good indication that price is potentially going to move that way. Yes, I'm about to put the chart settings back up. And it's also, well, but yeah, anyways, I wanted to show you all that example there. But yeah, I'll put everything back on over there. Futures. Thank you there, Simpler Dave. That was very helpful because that is what I wanted to show. Greatly appreciate it. All right, so we'll just pull up the ES here. All right, so once again, the settings are just up bars are green, red bars are down. Projection bars for up and down I have as yellow. I do have the wicks on. If you don't want the wicks, you take them off. Now this is where you may have to change things. All right, I want the open, high, low, close. It doesn't do that default. I want open, high, low, close. Okay, and then you also want the box size as the ATR. You will have to change that as well, and I just kept this as 14. So those are the things you will have to change right there. Looks cleaner. I agree. I think it looks cleaner too, Bob. But that's the setup there. Okay, so we have that. All right, cool. And then, so that's the Ringo charts. And over here, this is where it's just your typical candles. I don't change anything here. Yours doesn't look like mine. How does it look, James? So I have the 1 second over here, right? And over here is usually the 1 minute. And then right here, I usually always start with the hourly. And we'll start throwing up indicators here in a moment. Not as many colors. It's just a color change. Like if you, so like here, choosing a green, I just chose a brighter green. That's all I did. You can change it to whatever color you like. It's just a color. Doesn't really change anything. But yeah, it's just a brighter green. My green is more vibrant. To be honest, I'm not sure how I even got it there. Just, oh, right here, you hit the plus sign, and then you get to pick where you want it. So that's where you can change things. Like if you're wanting the same green, there you go. Oh yeah, 1 second, I'll show you here in a moment. So here's the green. Just copy that and put it in. Pretty. And then you hit the plus sign here. Here is the red I have. That's just kind of like what I have going on here. Okay, so the 1 second chart. Okay, so for changing time frame, right here, you see it says 1S, that's 1 second. You just click it, and here's where all the different time frames are. It says second, you just hit 1 second. Okay, so there is that. All right, so now that we have that set up, and okay, green, red. All right, 1 second. Okay, so we have the Renko charts. So I'm trying to do this in line with the presentation here. All right, so that is what is done there. You need to change yours to the Renko charts, James. Change to the Renko charts first, and then you can go back to it. Okay, so continue on here. All right, so VWAP. What is exactly is the VWAP? So the volume weighted average price. It is a popular trading indicator probably used by day traders and institutional investors, and I'll explain why there. Before Anchor VWAP actually got available to everybody, the VWAP was something explained to me by one of my mentors at the firm I traded for, because he used to be a trader at Goldman Sachs. He was like the options manager, desk trading manager, something like that. And anyways, he would talk to me about VWAP, and I was, oh man, that's awesome. Like, and he told me how it works, and I was like, oh man, that's just a good key point on how to like take entry and pivot it. And so I kind of that's always stuck with me, and I ran with it. So, in the easiest of terms, without me reading like the slide off to you that you could glance at it yourself and read, is like the VWAP is literally the balance of buyers and sellers based off of price, right? So whenever a price is, because it accounts for the amount of bid and ask being done at price as well. So it is literally the balance of buyers and sellers. At these points, it could tell us it's going to be a pivot point. And whenever you're day trading, you need a pivot in order to make a profit, and or to guess a movement. So it is literally the balance of buyers and sellers. And so here is an essential tool for measuring price level of a stock, futures, whatever you're trading, and it's a good solid pivot point. Oops, sorry, didn't mean to do that. So the way it was explained to me by my mentor, he said that the that institutional traders, they get judged by the VWAP. They get judged by it. So how? So like whenever they get, say, an order comes in that they need to buy, we'll just say $1 million worth of Apple or whatever, right? Just as an example, they can't just go mark it in, and they can't just buy it. They have to buy it as close to what is known as like fair price or fair value, which is VWAP, right? So basically, over the course of that $1 million, you have to buy Apple, which is say VWAP is at just for discussion's sake, which is say it's at 100, and then they have $1 million, and we'll just say that's going to buy. We'll just use or so this is VWAP, right? So I'll put VWAP. VWAP's at 100 AP. Okay, and then they have to buy 1 million of the share. But they can't just mark it in, right? So they get graded on how close price is to VWAP. So over the course of the average price, they want it as close as to 100 as possible, because it is going to come above it and below it, but they want your average price as close to the VWAP price all together. So why is that important? So whenever a price comes to VWAP, that's where institutions are making transactions. They are taking action because their job depends on it. If they don't, if they keep getting, say they're getting filled at, we'll just example say 120, so their average is at 120, then they're not getting good fills. You're not doing a good job, you're going to get fired, right? So if you're getting so that is how important it is. Institutional traders' jobs depend on it, and so that is why VWAP is such an important tool to use when trading. And we'll cover the VWAP strategies here in a moment as well. But that's the idea behind VWAP. And then, like I said here, how it works, it gets price, volume, it calculates it all. Here is, for you math wizards out there, here is the calculation for it. However, lucky for us, TradingView does it for us automatically, and we just use it to place trades there. All right, here are the settings that I have for VWAP and anchored VWAP. So VWAP, how do you put it on this chart over here, which is say we want it, I like to have my VWAP on the 1 minute chart. So then you actually just go to, actually 1 second, let's see something real quick. All right. Where did it go? Hold on. I don't know. Okay, just bring it back. Okay, so like I said, you come over here, you click indicator. So you click on the box you want, click on indicator. Right here, you just put VWAP, it brings it up automatically. Volume weighted average price. Click it. Boom, brought it up here. So now you can just double click on it. And then the things you're going to have to change. I don't like the high, low, close divided by 3. That's leaving stuff out. I want the open, high, low, close divided by 4. That is what I set mine on. Okay. And from there, I do take off the bands right here. And then you can click on whatever color you want right here and things like that. That is really all it is from the VWAP. And the VWAP is plotted down here. So once again, anchoring period, the session, the source, open, high, low, close divided by 4, and so on and so forth from there. Now the anchor VWAP is a little bit different. To find the anchor VWAP, as an example, what we could do, let's just say from this peak to this peak, how we want to know where price, where to anchor it, right? Let's just say we want to anchor over here. So you come to this box right here, hit this arrow. Right here says anchored VWAP. All you do is click on it, and we'll just say we do it here. Turn off those bands. And then boom, it plots the anchored VWAP from there. There's one thing that TradingView is very useful for. You just click and it plots it, right? Then we come here and we can plot another one from the low. Bam, right? Then you can see where the converging of buyers and sellers are going from this high and this high. But to change the stats on the anchored VWAP, you will going to have to change it to what it showed. But it is, once again, the open, high, low, close divided by 4. And then you pick whatever style you want and go from there. But the main thing to change is the open, high, low, close divided by 4. Okay. Y'all good? Clear as mud? I haven't seen the chat move in a while, or everyone just froze and I'm unaware. Yes, there is the PDF will be put into the class here in a moment, but it has not been submitted in there yet, really because of the adjustments that were going to potentially happen during the class, but it will be put in there at the end of the day. Okay, cool. All right, so we'll continue on. So those are the settings. Now, anchor VWAP points. All right, so these are the main things for day trading that I use features for. These are the only anchor points that I really need. All right, economic data that is released usually 30 minutes, or sorry, 1 hour before the market open. I anchor it to those points. FOMC days, or when those happen, I anchor those. High volume events. So basically anything that could come out and cause a change in, we'll say, sentiment in the market is good to have an anchored VWAP there. I will use the last swing high and low, and also the cash open. So what is the cash open? So when the market opens, I will place an anchored VWAP there. And another spot to add it is breaks of consolidation patterns, which we cover here in a moment. But when there is a break, sometimes what happens, let's just say it's a flag, right? Price comes up, boom, 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 and then breaks. You apply anchor VWAP to here. Usually what happens sometimes, let's just say the VWAP is, you apply it here and it comes up like this. And then price sometimes will come down, test it, give us a reversal signal, and that's when price will go back up. So I will show you those consolidation patterns here in a moment. They are part of the class. But these are the main 5 places that I anchor VWAPs. When it comes to day trading, this is all you need. There's more cases if you're like swing trading things from a bigger perspective or on stocks and stuff, but this is all you really need when it comes to day trading futures for these firms. All right, cool. Your screen is different than mine. Well, what part's different there? If it's not the same, do not worry about it too much, because apparently I was just told that we may be able to just hook you up there. So yeah. So yeah, not a big deal. Here's a yeah. I was just informed this also. She just told me. She just slacked me and told me um, that apparently we can share these because there are no premium indicators on it. So if it does not, if that's the case, I'm not going to go through the whole process of setting it up, since I in fact can share it with y'all now. Like I was just told this as well. So do not worry if it's not the same. We'll go through the process to giving them to y'all, and we'll go from there. All right, but that's really it from there. All right, let's see. Am I actually looking at volume or see a big candle anchored at that bow? I'll show you some of that whenever we get into the trading setups. We'll get to that. All right. As far as the questions on the setups, we haven't even got there. We're just trying to set up the charts. We'll get there. All right. Another thing, volume profile. Well, since I'll show you where I have mine, and since I can share them with y'all, that makes things a little bit easier, I would say. Because I was under the impression we could not share it as well, but hey, good to know that we can now. But the way I use it is if I go here and I'll scroll back, I'm going to show you how I use mine. Okay, so here, volume profile is an exchange of price here, right? So whenever price trades at the most volume that occurs at price, that's when you get the most this way. So can y'all tell me if the node keeps on going this way, what exactly does that mean? The further this way, what does that entail? Right, that means a lot of trading occurred at that price. Absolutely. So the way I use it as support and resistance, and these boxes are not automatically populated. So what I do this so I can watch it, and it helps me to where I don't have to just stare at this. So let's just pretend that this one and this one is not here. So I'll zoom in here. All right, so you see these two nodes here? That means that these levels are potentially going to be support and resistance. And I've seen this happen over and over. So right here, all I do is I come over here and I click this arrow. I click rectangle. I just click and bring it over. And then what I'm doing is I am boxing out the node. So where I'm wanting to place it and highlight it is from these points. So you see as I'll go to a side that is actually brighter, like right here. So right here, you see how price comes right to here, comes up, and then right here is before it drops down. I want that whole, basically the whole box where price starts to move up. That's where I'm highlighting. So once I highlight that because that isn't being support. Like this right here, you see this HVN? Look at this. It held as support. And then we got to move up. And so how can you trade this? So price moved up to this box. Like this is a good example of how it works. So like I said, box. I want to come right here. I'm going to highlight this node here. Bam, and move it up. Okay. So like, how could this information have been used to place a trade? Well, so price came up to this node, paused, pulled back, and held. Where did it hold? At this node. So what does that mean? That means I could take a trade from here up into here. That is basically, if this hold and price is going to hold, then this is where I wanted to look for price to stall. Now, if we break above it, then I wait for the break, retest, and then go to the next place, and so on and so forth. So those are just little zones that I look for support and resistance, all based off of the volume profile. And I do see the question, how do I know how bold to make them? It's how wide this is. So like if I wanted to make this one bold right here, I click it, look how, you see how price goes up about from this spot to this spot, and then I bring it over. See how it highlights that. And yes, I am using the 1 hour chart. And so how do you get this here? This is something you will have to draw on it. So this is the um, anchored volume profile. So like if I erase it, come over here, right here, which is anchored volume profile. I just click it, and I want to anchor it from the contract roll. Bam, and brings it over. Well, looks a little different, doesn't it? Let me zoom out here. Okay, good enough for me then. I'll just do it from the contract roll. So this would be a good example here. Right there, contract roll is right here. That's where that gap up is. Zoom in. See how it still lines up? Look, I can just move it this way and then move it back over here. See how it lines up with these nodes? So that is how you put that there. I have anchored VWAP from the swing low, right? You see how it was respected here, kind of there. Hasn't really came to it since then, but that is how I mark out support and resistance there. Bob, I love your positivity. I really do. Does the chart show a contract roll? Kind of. The gap up implements the contract roll. Yeah, kind of similar. Yeah, Trendy uses candles. This one's based on a volume profile. Yeah, kind of similar. Okay, so there's that. All right, so let's continue on to the class. I do have a few more things right here. Okay, volume profile. Volume profile is a technical analysis tool, provides visual representation of trading activity over given a range and then over time. So it shows how much volume has traded at a specific price level during a particular time period rather than focusing on volume traded over a specific time interval like volume bars. Um, Traders use volume profile to identify key levels of support and resistance, spot buying and selling interest, things like that. All right, so it's price levels, not time. So that's kind of like where it is really beneficial at. All right, so I showed you how to do that there. All right, so some terminology on it is okay. So high volume nodes, HVNs, and there's HVA. They're called HVAs, HVNs. It's all the same thing. So high volume node or high volume area. It really depends. So there's high volume and low volume, and high and low volume is dictated by the how far the node moves, right? So here's an example, a high volume. Oops, I left a little arrow there for some reason. Um, so what does that mean? So here is a low volume node. Here's point of control. I'll explain that here in a moment. And then look, high volume node. How is it high? Because it's bigger than all the rest of them. That is basically how that is defined. The more to the left, the big ones, those are high. Lows are the little ones. And since we're day trading, the little ones do matter as well. Ideally, from like if you were swing trading futures, like an idea could be like if price was here, like cool, you could have got long, take it up to here to this node, and then you like scale out. Oh, comes with the point of control or whatnot. Then you get out there, things like that. But from day trading, the little ones is I do acknowledge them and pay attention to them from a day trading perspective because we're looking at such a micro perspective. Okay, so that's what those are. Let me bring it back. Okay, so high volume nodes are just price sites where a large amount have formed. And then there are low volume nodes that are the smaller amount, like I showed you on the chart. So more to the left, more volume. The smaller node means less volume. Point of control. Point of control is the highest traded price across whatever time you're analyzing. So in this case, if we use this as the example, right here, the dotted line, that point of control. So in this entire analysis, the level in which price transacted the absolute most is 57. It will go down a little. It's basically 57.7350. That is the price that has been used or transacted the most down here. So that's what point of control is. It's just the price that has had the most volume. Okay, so that's basically, and I use volume profile for support and resistance. And a lot of it will make more sense as you do live trading and we do the breakdowns and stuff like that. Do I use the squeeze indicators? No, they're on these charts right here, but no, I'm not using it as a dictator really. I'm going to remove them whenever we get to the trading and stuff. All right, so anchored volume profile. This is what I have here. I have the ticks per row size 5, up, down. Boom. That's what the anchored volume profile is. And like we just recently discovered, do not worry. I can actually share those charts with y'all there since we don't have any premium indicators in this chart setup. All right, super trend. Something that is different. I'm going to show you real quick. All right, so this is what super trend is. Similar to the trailing ATR, right? Goes up, down, so on and so forth. So, okay, here we go, super trend. So trend following indicator works similar to the trailing ATR. All right, the components to the super trend indicator, it takes your ATR. It's built using an ATR. The ATR measures the current volatility, so it's measuring the current price action that is unfolding in front of us. That is why I find it to be pretty helpful, because it tells us in the current moment, as price is moving, how far does it need to move to actually pinpoint trend reversals, which way is it going, things like that. Yeah, but it also has a multiplier. So the multiplier determines how far away from price super trend line will be placed in multiples of the ATR. The higher multiplier will place the super trend line further away from price, reducing false signals, but potentially delaying entry and exit points. So that's kind of like, that's with anything really. The more data that's going to put in, if you use a trailing ATR as an example, really, if you used a really large multiplier, then actually will move, has to move far. It definitely means that the trend has moved, but it also means that you may be getting in a little bit late, right? And the company values are 10 period ATR or 3 multiplier. However, that is not what I use. I'll be giving y'all what I use here in a moment. So basically, like I said, it's basically like a trailing ATR is how I use it particularly. So when it is above price, then it prices in a downtrend. If it is below price, it is in an uptrend, and I typically have it green like this, but obviously you can change the colors however you want. And it does, it is used as a dynamic support and resistance. It's unique how accurate it is. It really is. And I want to pull out some examples, and we'll look at it on the charts. So how it works, when price closes above the super trend line, it flips below the price, changes color, often green, signaling an uptrend. And it's considered a buy signal. And then whenever it flips red, it's considered a downtrend, and then it's a sell signal. I mean, pretty self-explanatory. So I'm going to go ahead and pull this over here real quick. So in this case, right, price is kind of choppy here, and then you get it pushed up above this red. It flipped green, and then you get a move, and look how I like, came right to it, and then boom, oh, it flipped again. Boom. Flipped again, up, get a pullback, and boom. So the way I use super trend is there's a little bit more to it than just following the super trend. It goes into more setups, which we're going to cover in a moment. But what I look for is I look for the flip. I look for the pullback close to the line because this is my stop loss level. In this case, this has been a great one, right? If it pulled back to here, get long, stop on the other side, boom, that's a tight risk reward, right? Say it flipped red here. If I have a larger time frame thesis price is going to go up, I would ignore this part. I wait for it to flip green. I get my pullback close to super trend because my stop's on the other side, and then I look to take it up again with the overall trend. So that's how I use it. Say I have a thesis that price is going lower, then I'd wait for it to flip red, wait for price to push rally up into it, and then I get short, stops on the other side, and then I look for the move to continue forth and what I'm having a overall market thesis on. So that is how that works with the super trend. This I need to change. I've actually did some back testing and messing with it. I'm actually changing this. This is not where I want it. Let me get the updated version. Have any of y'all messed with Super Trend before? It's a free indicator, obviously. It's been pretty, and all I did was change this to 7. So I have it at 10-7 chart. Where did I lose y'all? Where'd y'all go? There y'all are. Yes, it's an indicator, not a drawing tool. So like how would you need to get it is you pull up your thing here. Say you wanted it, you would just click on the chart you wanted it on, go to indicator, go here, and you put super trend, and then boom, it plots it there. Let me fix that there. Like it's very unique. Which one did I put on? This one. Okay. But it works pretty well in my opinion. I personally trade If I'm going to trade early, I will trade oil. But ideally, I like to have the movement, so I typically only trade the market open. However, if there's economic data that comes out an hour before the open and there's a setup, since there's going to be volatility based off the data that was just released, I will potentially look for a setup there. But for the most part, I'm only trading the cash open. Add the volume profile just by clicking on the chart you want it on. And then right here, you hit this arrow, and then go down here to anchored VWAP, or sorry, anchored volume profile right here. This is what I used there. In general, it depends on how volatile it is, Victor. You want to see my settings, you say? Not even going to take me on a date first? Which one are you needing? Oh, super trend style settings. Yeah, absolutely. Okay, style settings. This is what I have it on. I just changed it to the same bright green and red that I have there. And I have it plotted the background. I could make it brighter if I wanted to. See how it makes it brighter like that? Let me show y'all something. All right, so I want to show y'all something that I kind of messed with here, and it gave me confidence in this particular indicator. I'm going to share something with y'all here, and that might help y'all understand a little more. I want to go back here. Okay, cool. All right, so back testing, right? In this particular case, it back tested a super trend, and this is based on the NQ. And you look at this equity curve. Sure, it has ups and downs, and it's going to matter. Like it's correct 50, call it 49% of the time. Profit factor of almost a 2.1. However, this is just based off of the algorithm backtesting it. There are some cases to where you need to where you can't just blindly follow these signals. That's where the setups I teach you and then when to use super trend within those setups is when it really comes to play. But this just shows you the power of it. Then when you tie it to the high probability setups, then it really works out for you altogether. But I just wanted to show you this. It works on almost all. Oh, so this is like the NQ, right? So what if I was to bring that down? I'll go to the ES here. Oh, this one didn't do as well. But this one is kind of like a multi-time frame one, and it's a little clunky. So this one did not do as well. The NQ was much better there. But whenever I started seeing the backtesting results, that's when I was like, oh man, there's something here. I gotta finesse it. So that's what I went with. All right, on Amazon. Okay, here's the chart where we were building, but we no longer have to do it there. I personally use two, but you use as much as you want. How do you get multiple charts up? You just hit the plus arrow like it's a tab, and then this box right here. So I personally use two monitors, one for my charts, one for execution. And then Victor, answer your question, like it depends how deep it pulls into. But when we get to the setups, I'll show you because we haven't even got to the setups yet. This is still just the charts. I was wrong on thinking 2 hours. But Brett, to answer your question there, as I have an expected win rate and R&R my steps. So these are quick setups. They're very much scalping. The R&R is anywhere from, I'd say 1-to-1 to 2-to-1, and they're pretty quick. So that's pretty much, and my win rate has been staying around 75%. So it's kind of like not so it's not like I don't and it goes back to the expectations. Having expectations low because there's not always something that's going to make a huge like 1-to-5 win rate there. You know what I mean? Okay, so there's that. Let's go ahead and continue forth. Let's get moving. All right, so I wanted to change this. So here is the super trend settings. I have 10 and 7 on the 1-second chart. Oh, you're welcome, Brett. Absolutely. And Bob, I do use fibs in this particular case. I guess this would be a good example, like when to use fibs. I have fibs on now that we're all at time highs. There's no volume profile to tell me when price potentially may stop, right? So I do have a fib drawn from this high to this low, and the 1618 is right here at 5959. So how would I use that? So if this does happen, feel free to watch this recording to know how to utilize this. So I have like I said, I have a fib level drawn from here, this high, to this low. If price breaks, right, this HVN right here, or this, I guess it's a LVN, just a little node. If price does break, I'm not going to chase it up. I want to wait for a retest, and then it's going to come here, and this is going to be my next target. So this box is where I would look to take profits in. So you see, I'm kind of just trading boxes, and within these boxes is a setup that I trade, and we haven't even got to those parts yet. Okay, so I do have a fib. I do use fib levels whenever the volume profile kind of gets like there's no volume up here, so we don't know. But that's what I'll watch. Gold was a good example. It went right to one, and kind of stalled there. Let's see, is it still there? There it is. Okay, so see, it came up to the 1618 and kind of paused there. And it broke, kind of consolidated. It went right up to the 2618, kind of paused right there as well. And now it's just gold's just rocking and rolling. But that's just an example of the fibs. Okay, so y'all are going to make my voice go away, and my wife is going to thank y'all. Bye, Chad. I'm sure you're already gone. But thanks for coming, my man. All right, so cover super trend. All right, terminology. Okay, so like I've mentioned before, I'm a big price action trader. So the way this works is the reason I covered terminology is because that way you kind of know what I'm looking for, and then we finesse it down, and then and I'll show you exactly. So now we're getting down to the trading setups. Okay, so we're gonna have to tie this all together. There might be some questions and whatnot, so make sure you have notepads together and whatnot. And actually, before we hop into this, I'm gonna get a drink of water and whatnot. So let's go ahead and take a quick we'll just call it 7-minute break. Y'all cool with that? Because been on for almost whole hour, almost a little bit over. To be honest, I don't know. We came back at 11:20, so we actually been going for a while. Okay, so let's come back at 12:50. We'll take a quick break. Okay, so come back at 12:50. Thank you, Mirza. All right, hey, y'all, give me 1 second. I want to take the screen down. I'm actually talking to Lorna right now. She's telling me how I could just give you your charts to you right now. I want to give them to you before Monday shows up. So just give me 1 second. I'm going to talk to her real quick, and she'll tell me how I can give them to you right now. And that way you'll all have them right away. Okay? She's just going to walk me through the process, and then boom, then you'll have them. Okay, so give me 1 second. Okay? Here, I'll do this too. Let's put a little break so I can get you your charts.